Good afternoon, everybody. Cheers. Welcome to the weekend edition. My name is Merlin Rothfund, and man, I had a great trading week. I hope you did as well. One of those weeks where you just look back and go, man, I had literally like 3 things went bad, and I had probably 25 things went right. I'm okay with that because those 3 obviously were really small little ones, and I had some pretty nice winning trades this week. So cheers, everybody. Hope you had a great week. And an even better weekend going up. I don't know if anybody here is a bluegrass music fan, but I will be out checking a gentleman by the name of Billy Strings tonight up in Los Angeles. Pretty excited about that. He's the heir apparent to the bluegrass world. Phenomenal musician. If you have a chance, go look at YouTube and type in Billy Strings. Anyway, let's not waste time. Let's get to it so I can get on the road. Well, I got plenty of time to get on the road, especially after having a glass of whiskey. We'll go eat this evening. So the topic du jour. The time has come, and I really like this picture that AI generated for me. It kind of looks like Jerome Powell, and it says, the time has come. What does that mean? Well, I was going to post the link this morning, but I'm sure some of you were actually watching the statements made by Jerome Powell in front of the economists in the room. I love that he was actually cracking jokes. He was actually kind of funny. The room was laughing at his jokes as well, which is always good. You got to laugh at the boss's jokes, right? So I did make a bunch of notes here about important things that were said at that meeting. And, he said exactly what I talked about in yesterday's show. He said inflation, is getting closer to our target. We're still watching that. He said the labor market has cooled considerably, which, of course, we've been talking about that. And we said he'll probably point a finger at that, saying labor market might be an issue. Particularly, he said the last 6 months, and he reflects supply and demand as being the issue for the labor market. He also said, it seems likely that unemployment will test the impact of inflation. Okay, fine. And then the big comment that he made, right? The big comment that he made today was this right here. He said, and I quote, "The time has come for policy to change." It's not exactly what the market wanted to hear, but it gave them a sigh of relief of, okay, the Fed has turned its focus to maybe lowering rates here this year. Now, the time has come for policy to change. To me, that says something. That says that the next meeting they're cutting. But what he didn't say is, anything beyond that. He didn't really say how aggressive they were going to be, how many times they were going to cut, what those rate cuts might look like. He actually felt like he was softening the blow by referencing the unemployment data and inflation a little bit here. So I still stand pat. I think we're getting 2 cuts. It initially was 1, but I think we'll get a second one probably in November, and then they'll take a pause to see how those 2 cuts go. The dates, but the forecast, it just got even better today with regards to rates. So let me bring that one up for you guys. What am I? Bib and Tucker was that question. No, it's Bib and Tucker today. I'm a big fan of Bib and Tucker. My friend Carrie bought it for my birthday a couple years back, and man, it's just delicious. Just tasty, tasty stuff. Anyway, here's our forecast for September. Nothing has really changed here. I think you can actually scroll down and see what it was yesterday. So yesterday there was a 76% chance. Now it's a 65% chance. And notice that a higher probability now of a 50 basis point cut at September 18th meeting. I don't see it. Again, we're not going to repeat what we did on yesterday's show, but I don't see 2 rate cuts happening, a 50 basis point cut happening on the 18th. No way. I'll bet Jerome was drinking whiskey. Probably not. He had to keep his wits about him. But this just shows you what the markets thought about today. It certainly gave the speculators the green light that, hey, we're going to have more rate cuts this year, but I think this is just way overzealous. I mean, to see it jump to 35% probability that we're going to have a 50 basis point cut to me is crazy. No way. Now let's look at the end of the year. How did this shift? The December 18th meeting. Right now, there's a 44% chance of a 100 basis point cut. All those numbers increased. Look down here at the bottom. The probability shifted to even more rate cuts by the end of the year. So the comment, the time has come for policy to change, caused these speculators to real quickly ramp up their bets, thinking 4, 5, maybe even 6. There's a 5.3% chance that we're going to see 6 rate cuts by the end of the year. That would mean that at least 2 of these meetings, that means at every meeting for the remainder of the year, they're going to cut 50 basis points. You guys know my thoughts on it. I I've expressed that dramatically yesterday. You would only do that in a state of panic and serious economic crisis. If they started at 50 basis points in September, markets are going to tank. You're going to see a pretty bad market reaction because of that, because it means that there's something bad coming. Let's see what is here from Liz. Surely he couldn't have said anything concrete about timing the amount of cut. Nope, we would never do that, right? Never do that. Since it has been approved by the board, and this wasn't an official FOMC meeting. Correct, but they all know these guys know what's going to happen. And this is where I don't like, if the SEC is responsible for tracking insider trading and, sharing of information, and we are all the last person to get this data, right? That speech that Jerome Powell gave today at Jackson Hole Symposium, I'm willing to bet anybody here, that speech has already gone across the desks of some of the major financial firms. Whether that was done intentionally or just, hey, could you give me some feedback, Mr. Diamond, about this? That information is out there. These big institutions already have a chance to act on it, which is the only real reason I keep bringing this up. If we look at December's numbers, these to me reflect absolute pessimism about our market going forward. And maybe I'm missing something. We talked about this before. I certainly am not going to be looking at super aggressive bullish bets right now, because this to me says people are feeling like there's a bad economy coming. And most traders that are doing this, it's not you and I. I mean, has anybody in this room, has anybody here ever traded a Fed funds futures contract? I've been trading 27 years. Never traded them ever. Just something I probably never will. Just keep it there. It's like my Apple. I can never trade them again. So those people who are trading them, I think these are institutions. These are guys making forecasts. At least I think that. I'm sure there might be some retailers in there, but this is very aggressive. It's funny because you can actually go out by December of next year. Let's go out to December of 2025. The expectations are that we're going to be at 3.25 to 3%. That would be 250 basis point cut from now. Yeah. If Jay cuts aggressively, the economy is in dire condition. Exactly. And I think that's the fear. I think that's the fear why you don't want to do that. Look, it's going to be 25, maybe another 25, and an extreme 25 at most. And to me, this would be somewhat aggressive. We'd have 75 basis points cut by December. What's the probability of that one? Just so we can all look at those numbers. That's a 24% chance of that happening. That's the low end, Everybody's kind of expecting there to be even worse than that. So crazy to me that the expectations are so high for rates to change. However, we do know that they are going to change simply because it says the time has come for policy to change. I loved when I heard it. My eyes just kind of widened. I was like, oh, wow, he actually really did say that. Could it really be a soft landing? Hey, Big Eb, that's a great question. Could it be a soft landing? Sure. I would be somewhat surprised at it, but, whatever. How do you read those charts? Which charts, Margaret? Are you talking these FOMC ones? The one I have here, not the Fed funds futures? Well, basically, let me know if that's what you want me to analyze that chart. But yeah, I can explain that here if you want to. 52 miles. I'm buying a RAV4 Prime into. Hey, 0% interest. That'd be good. Who doesn't like a 0% interest loan? No, that's good. Although I still think you should go with a used car. But so, Margaret, what it means is right now we're currently at 5. Let's call it 5.5%, or it's 550 basis points. That's 550 up here near the top, right? It says current target rate. That's what we're currently at. These are showing down at the bottom the expectations of different rate brackets. So let's go to the September one, and you can see here. Underneath this one, it says 500 to 525. Well, that would reflect 25 basis points off of the rate above, right? Currently, it says current target rate 525 to 550. This blue bar here with 63.5% probability says 500 to 525. So that would reflect a 25 basis point cut. The next one over here, which is 36.5%, is assuming 50 basis point cut. So that's how they're measuring these out. Just kind of what's the probability of rates at specific levels at a specific moment in time. So there are people right now betting on futures products that expire in the 18th of September that this is where price is going to be, or where rates are going to be, excuse me. And of course, the further out you go, the more wildly diverse those get. But I'm not looking at anything past December because I just realized that things can change so quickly. Here you can see the big higher spike in the middle, which is 43.8%. That's 4 rate cuts. That's 100 basis points because we're at 5.550 and to 450. So that's 100 basis points or 1 full percentage point off the Fed funds futures rate. I hope that makes sense, Margaret. So, what does this mean to you and I? Well, the good news is you're going to hear me stop talking about inflation as much as we have. Not that inflation is done. Again, we're at 2.9 on CPI. Next Friday, we'll have the core PCE price index numbers come out. We'll see how that goes. We also have GDP coming out next Thursday as well. So we have some pretty big economic data happening next week. However, remember the dual mandate by the Fed is full employment and stable pricing. Inflation is the stable pricing part. Obviously, jobs and unemployment is the full employment. We've been focused so much on the inflation piece because that's what they've been fighting. It's been a very clear battle, and it appears, not that it's over, but that is slowly starting to decline. We're starting to see the inflation numbers subside. And now if it's under 3% on the core PCE price index, that should make everybody feel happy about inflation, right? At least warm and fuzzy. But as we've looked at before, and we talked about this on my show, what I think last week, where I talked about, what are the factors that could bring this economy down and looking bad, the big one was unemployment numbers. And the unemployment number has been rising steadily. And I'll bring that up for you guys here in just a second. Let me bring this one up. That's the first weekend of the month. So we'll go to September 6th. Here's your unemployment rate. And what I think is going to be interesting is the CPI and PCE numbers are going to be important, right? But really, I think our focus needs to shift to the jobs numbers. Maybe not initial claims, but certainly the unemployment rate. And if an unemployment rate continues to move up like this, then I think we're all going to have to look at jobs much more closely and be careful on the Thursdays when unemployment claims comes out, or JOLTS job openings, or ADP non-farm employment numbers, all that type of stuff. I think is going to be critical for your trades. We may see the more volatile swings now happen on unemployment rate days. So I think the biggest day we're going to have in the next few weeks, besides next Friday, is going to be September 6th. And we'll obviously be live when that happens and keep an eye on what goes on there. But it could be quite wild, particularly if this jumps expectations. Now, if you look at this chart here, the previous reading we had for August, right? The expectation was 4.1%. We came out at 4.3. The month before that, expectation was 4%, came out at 4.1. So we're accelerating much faster than all the expectations, and it looks like we're picking up speed. This will probably be more of a talk track as the weeks and months go by. If inflation stays down, then unemployment will take the center stage. And that will be my guess there. And let me scroll up to the week here, because that week of September 1st, right, the first week, which I may actually take that Wednesday off. I think I'm going to go to Disneyland on the 4th of September, just kind of setting the precedent here. But you notice on that week, you go to Wednesday, and we have JOLTS job openings, right? So you got a jobs data on Wednesday. You go into Thursday, then of course we have our typical unemployment claims. That always comes out. You have challenger job cuts. And then you look to Friday, you've got the non-farm employment change. You also have the unemployment rate. And I think on Monday, ADP non-farm employment change should be on here. I'm not seeing it. Oh, there it is. On Wednesday, you'd have ADP non-farm employment change. Again, if these numbers start to surge, then you could see rate cuts happen faster. But again, I think it's going to be data dependent. Big Eb says if unemployment rises, housing will suffer no matter the rate cuts. Correct. That'll be one aspect of it. And remember, these things are so cyclical. I believe it's the Rube Ginsburg puzzles, right? Is that what they're called? Rube Ginsburg? Where you push the golf ball and it rolls, and then it hits the dominoes, and the dominoes fall, and then they hit the teeter-totter, and the teeter-totter lights the candle that burns the balloon, and the balloon pops. Right? I think those are called Rube Ginsburg puzzles. And for me, this whole thing is that. We are in a giant Rube Ginsburg puzzle. I apologize if I'm butchering the name. I keep thinking Ruth Ginsburg, but Big Eb's right. If unemployment rises, right, we see more and more people out of work. That domino, is it Rube Goldberg? Rube Goldberg? Rube Goldberg. Thank you. I don't know why I said Ginsburg. My bad. Sorry about that. I was just thinking of old Ruth up there. That was to you, Ruth. Rube Goldberg. Okay. If unemployment starts to trickle up, which clearly it's been doing, and we have identified that, and that continues to move to the upside, you got to start thinking about where those numbers are coming from, which jobs are being impacted. More people unemployed means less money for people to spend. Less money for people to spend, that triggers now the retail sales numbers for businesses. If retail sales numbers start to get bad, businesses do more layoffs, and then we see more unemployment. And this cycle just keeps going bigger and bigger and bigger. Not to say, that whiskey must be really good. Tasty. Cheers. Thanks for reminding me, Margaret. Let's be clear. I'm not saying that this is the beginning of something awful and atrocious. It's just understanding that this domino of unemployment could lead to other actions here. And if it does continue to persist, and let's say unemployment does rise to 5 or 6%, we might start to see some bigger problems going forward. But at this point, not really worried about it. I put a picture on here because the employment data, or the unemployment in particular, will now take center stage. You'll definitely hear it on the Monday Morning Must Knows. I think that the employment or the inflation discussion will slow down a bit, and then we're going to get the bigger unemployment numbers. So from a market perspective, that was kind of the big headline pieces that I found interesting for myself, and hopefully you guys did as well. I had a lot of positions open this week. I had QQQs, I had XLK, I had Rivian, I had a few more, and everything expired worthless today, which was fantastic. And again, it goes back to what am I going to shoot for next week? You look at what these markets did. I was expecting a little bit more. When you look at the end results here, like NASDAQ, for example, NASDAQ had that really big sell-off yesterday, was looking for more downside movement. Of course, Powell ruined that one, which, it's fine. S&P had a similar picture, right? We had that really big red candle yesterday. I'm glad I closed out my short position when I did, or got stopped out on my short position for a gain. And now all of a sudden you have this ripping back to the upside. So I think there's a discussion where people are expecting that we're going to go back and challenge all-time highs yet again based off of Jerome Powell's presentation. So, I got to quit doing my thumbnails with bulls and bears, because every time I post a bullish one and it goes bearish, people yell at me. And every time I post a bearish one and it goes bullish, people yell at me. I just can't win with my thumbnails. Merlin, did they revise the unemployment report? I'm sure they do, but I don't know if that's a regular thing. Again, I don't really trust the numbers that are being put out there. When we get that unemployment number, all I'm doing, and this is the maximum amount of effort and thought I want to put into it. When that unemployment number comes out, which is going to happen again on the 6th of September, right here. Okay, just so I have it up on the screen for you. When that number comes out, all I'm concerned with is, what was the expectation? The three things. Number one, what was the expectation? What was the forecast? And how are people going to react to it, right? So it's basically going to be this little gold line here, which is the expectation. The blue bar will be the reality of it. And then really, was it a huge miss on expectations? Were we under it? Whatever. That's all I'm doing. I don't know if the numbers are true or not. Don't really care. I tell myself that all the numbers are fake anyway. I just don't believe that those numbers are real. Do they revise stuff? Sure. Yeah, they always revise things. I mean, not every report, but they definitely do revise a lot of reports over time. So yeah, there you go. Next week, we have several key tech companies reporting. Nvidia, Salesforce, CrowdStrike. Yes. And Liz, it's all about Nvidia. It is all about Nvidia. Like, I actually don't have, maybe I do here. Oh, I deleted it. I should have kept the Jensen Huang one on there. Let me see if I can do a poll here real quick before I start my commentary. Let's see. Will Nvidia surge on next week? Okay, so here's a poll question for everybody. Answer it as quickly as you can, just so I can get to my points, my belief on this one. And again, I have no idea if they're going to beat earnings or not. If you look historically, which I will bring up here in just a second, after a little sip of the Bib and Tucker. So let's bring that one up here and show you Nvidia. Because this will be, in my opinion, the most watched, the most anticipated, and the most scrutinized earnings announcement of the quarter. That's it. It is absolutely center stage. It will be, it'll be a wild, wild day on Wednesday evening. Going into Thursday's trading could be absolutely bonkers, and it's all because of Nvidia. Well, it's funny that this company, like over the past few years, came out of nowhere and is now it. Like it looks to me like everybody in the investment world is using Nvidia as a measure of the economy, because if Nvidia does well, that means that companies are spending a lot of money for growth. You got Alphabet, you've got Facebook, you've got Microsoft as well. Alphabet and Microsoft have both said they spent a ton of money to get all those chips. Even the CEO of Alphabet or Google said, I would much rather be over-prepared for AI than under-prepared for it. And as people come on and demand AI services, if you are a service provider like Google or Microsoft and you don't have the infrastructure to onboard new clients, they're going to go elsewhere. So you have to buy all this stuff ahead of time to make sure that when those doors open and when the people want those goods, you're there, you've got it, you're ready. They made a statement on both of their earnings that they'd spent a lot of money. And I don't think that they're going to have blowout earnings. It's just a gut feeling they have for a while. Let's look at those earnings numbers here. I'm just going to go back the past 4 quarters, right? I'll go back into August of 2023. Nvidia was supposed to report 20 cents. They came out at 27. Blowout earnings. The next earnings announcement, which was the 21st of November of 2023, supposed to make 33, came out at 40. Then our next earnings announcement, which was on the 21st of February, supposed to make 45, came out at 51. I mean, these are great numbers, and you're seeing every time they get bigger. Then it was make 56. They came out at 61. So all of it's looking great. Now the expectations are they're going to come out at 64 cents. My guess is they'll probably come in line or beat that, but there's going to be a talk track at the press conference that says things are slowing down, that the consumption of these chips, people buying our GPUs, is starting to slow down. I think that that's going to be the talk track. Remember, the last meeting, last earnings announcement, Jensen Huang said, our expectations are great. We're raising our forecast going forward. At some point, that demand for those chips is going to start to slow down, and they're going to have to lower their forecast. So let me see what you guys said. End poll. Very few of you. Where is everybody today? Almost nobody here voted on that one. Earnings will likely be gangbusters, but future guidance may disappoint. Yeah, I don't know if I wouldn't say earnings going to be gangbusters. I think they're going to beat earnings. Gangbusters to me is where you beat like 50% higher than expectations. I don't think they're going to get that high, but stranger things have happened. But I do think that they're going to pull back on their forecast a little bit. It just seems like that'd be the smart thing to do going into this tail end of the year. I thought he liquidated a lot of Bank of America. Who are we talking about? Jensen Huang? Thomasina, no need to apologize for anything. You're good. Only competition will do that, and it isn't there yet. They may go up $7 to $10. Well, we'll see. I don't have any forecast. I mean, if it goes up $10, you're talking about an 8-9% gain in the share price. I don't know. I will not be trading that announcement just because I don't like to trade when announcements come out just because it's a bit too volatile for me, and you could get lucky or you could get absolutely slaughtered when that happens. So you got to be too careful on that one. So Warren Buffett sold a bunch of Apple, and if you look at how much Bank of America Warren Buffett had, it's smart of him to sell some of it. You got too many eggs in one basket. Okay, so yeah, Nvidia will be your biggest thing, and I saw mention here CrowdStrike as well, and Salesforce, CRWD. I'm bummed my shares got taken away. I really hope that their earnings are bad so it crashes and I can sell more puts on it and acquire it lower. I mean, it was actually, even though I sold puts and I was assigned on my CrowdStrike, ended up with 300 shares of it, which is not a lot, but the price is fairly steep. The premium and the rate of return on that trade for me was just fantastic. Not only because the gains, but I also collected a lot of premium on 2 separate options trades on the puts I sold as well as the calls I sold. Ended up being a great trade, but I'd really like to buy back into CrowdStrike. I think at some point they'll be back up at that 390 mark. They just had a bad hiccup there. Put your Nvidia friend on the show? No, he'd never come on here. No way. He would never come on. Too dangerous for him to say things on air like that. You know, you got to be careful what you say on when the microphones are on. Just ask Richard Nixon. When the microphones are on, you got to be careful what you say. A lot of scrutiny on recorded conversations, that's for sure. I'd love to get him on, absolutely. And certainly, if I had a PR person, maybe I'd ask him to go and see if we can get Jensen or any other big person on the program to talk about the numbers for their company and forecast going forward. AI will certainly take center stage for Nvidia because that is their main focus. But there are other companies out there that are starting to creep into that space. And I think over the next 6 months to a year, we'll hear more about chip makers developing better processing units and getting chips that might compete with Nvidia. But still, they're the only shop in town. For what you're getting for their chips, they're the best one out there. And then Salesforce. Great looking chart. You actually have a pretty interesting ceiling on Salesforce right now at that 264 mark. If we get above that, you'll end up closing that gap fully, and that was actually what happened last time they did their earnings. So last time they did their earnings, they had a pretty significant drop down. We've since recouped that. Who knows? Maybe it's the earnings season will kick it back down to those lower levels yet again for Salesforce. But again, that's all going to happen next week. Now, if you notice our sectors today, almost everything, well, actually everything of the major sectors was pretty positive out there. Big upside move for the Russell, 3.19%. That was a surprising one today. Although when we look at the futures, we had that bullish flag drawn on there yesterday. That was nice. Just ripped to the upside on that one. Based off that, I'm thinking you're back to 22.75 on the Russell. If momentum continues on to the upside here, seems like Jerome Powell basically just said, let's throw a bigger party and let's keep this thing going. Oliver, yeah, RFK finally announced his endorsement of Trump. Yeah, wow, that's a surprising one. If you look at the history of the Kennedys, seems like they're synonymous with the Democratic Party, and the action by RFK today really strange. Who knows all the details? I don't particularly follow all of them, but yeah, dropping out and endorsing Trump, which was kind of a shocker to me. Of course, the industry's been talking about that for the past couple days now. Man, the Democrats not going to be happy with that. And it's weird because he's pulling out in key states, but staying in some, which I thought was strange. And maybe that's just to take more votes away from the Democrats. I'm not quite sure. We will see. What else do I got here? IOR, Exo real estate rip today. Yeah. Lower rates, right? Liz, if rates get lower, what's going to happen to the housing market? It's going to heat up. You look at IYR, you look at, let's just look at IYR. And when you look at IYR, it's had a beautiful trend going since April. And if you think about what happened in April, that's when really the talk track was that we're going to start to see some rate cuts this year. So the housing market really reflecting positive outlook for yields. If the yields keep dropping, 30-year fixed rate mortgage is going to get lower and lower. You can see here the 10-year today dropped another 1.43%. We're at 3.8 on that one. We look at that 30-year fixed rate mortgage. I should probably find a better site to have the 30-year fixed rate mortgage numbers on because this will be, it's definitely dropping. 30-year mortgage rates, let's check that out real quick. We talked about this with like the best score. What do you get? 6.5% right now for 30-year fixed rate in California with 20% down. Those numbers have dropped significantly. Here you can see the history of it. And this is just back to, let's say, June. June, if you had the best credit, you were up over like 7.2%, 7.3%. So you're almost 80 basis points lower than that right now. That's a gargantuan saving on your payments over time, especially when you're looking at 30 years. It may not seem like much, but 7.4 versus 6.5, that's hundreds of thousands of dollars down the road of savings, depending on what your loan amount is. The documentary of the assassination was filed with power. I didn't see that one. Have you ever covered Dow Theory? No. I mean, I know Dow Theory. Maybe one day we can do a special on it. I'm not a big fan. Not a big fan of that one. So let me run through our markets, and then I'll kind of wrap up here, and then you guys can enjoy your weekend. Start off with that dollar index, with the 10-year. That yield, trend is your friend to the bend at the end. Big ebb, glorious on this, and maybe I should challenge Big Eb for a 3.5%, although based off this trend, it will probably get to 3.5%. Just keeps on dropping and dropping and dropping and dropping. So next on our list, dollar index. What do we say about the dollar index? Said it's probably going to shoot down to this 161.7 mark. And lo and behold, today, the low, 106.02. We literally hit the line drawn, which was the low point from this December 28th low. If we don't get a bounce here on this dollar index, then for certain we're going back down to this 99 level, and then we really have to think about the plight of the dollar. So this will be a very interesting one to me. If this does break that 99.75 mark for the dollar index, where's your next stop? It's going to be probably down somewhere around 97. That's a pretty significant decline. I don't know exactly what the overall impact of that will be, but that's what the trend looks like right now. Lower lows, lower highs, picking up acceleration. You have rates being cut, which makes people less attracted to the U.S. dollar, to buy dollars. You have the unwinding of different carry trades, whether that's the Japanese yen carry trade or maybe even the New Zealand. Well, New Zealand won't impact us, but that's the unwinding there, hurting us. What did I see in here? No, I like being owed a beer. Well, we gotta figure out maybe that meet up and let's have a beer someday. My next stop, Bitcoin. Yeah, buddy. We'll get to that. That was your best performer today by a wide margin, but these are the beautiful trending markets right now. Have been the 10-year yield have been declining, and dollar index breaking to the south side and selling off here. Next, we got our NASDAQ 100, which isn't a beautiful uptrend in my opinion, but double tapped on that ceiling. We'll see if we get back up in there next week. Based off the comments, the euphoria, the excitement, the way that his comments were received, I actually did think he did a very good job presenting today. I enjoyed his presentation. Most of them I think are just so boilerplate and boring. This one was actually rather fun. But we looked at the NASDAQ, we looked at that S&P, which based off this trajectory, will probably be at those all-time highs next week. You had gold, which broke that all-time high on Tuesday. I was going to say last week. On Tuesday, and now you have a retracement of its sell-off yesterday. So maybe we'll see gold continue its trend up here. We didn't get much of a pullback at all. Crude oil also having a nice little rip off that little that lower level that we drew out at 71.47. Bounce off that today with a 2.49% gain. Nice move, but still the trend is down. So keep that in mind if you're looking for any sort of buying opportunity for crude oil. Then Russell. Russell was really just the outstanding breakout today, up 3.14%. Again, rallying to small caps. Basically, in times of economic growth, robust times, small caps perform better. And maybe people are anticipating, because of the rate cuts, that the glory days are back. I don't know if I'm on that boat. And finally, Bitcoin. Still in a downtrend. Still not looking great. But today, a 5.74% move to the upside. I'll take it. $3,500 for Bitcoin. That was a nice day for me. We'll see if this continues on. I think I've said this before. I do believe that low we saw in early August, that's the low. I don't think we're going to see 50,000 again. I think we're going to continue to slowly grind to the upside. You had with Kennedy dropping out, opens the door. And my guess is there will be an appointment for Kennedy somewhere on Trump's team. I would love it if it came in the form of a crypto advisor or something along those lines. I heard rumors that, what if he appointed him director of the CIA? That would be interesting. Well, you talk about all the skeletons in that closet that would be opened up and doors that would be opened into the past and assassination attempts on other people. We might actually know the truth about the Kennedy assassination. But unfortunately, we lose Kennedy as a supporter for Bitcoin, at least on a presidential front. But now we're back to Trump and Kamala Harris. So we'll see which one of those wins in November, and there'll be a long, long time before now and then. I'm excited. FDA, something health. What did I see here? The swarms of people of every race, every creek, train tracks, watching the train. What are we talking about? You lost me there. Oh, you're talking about Kennedy. Yeah. Merlin, when are you having Larry on again? I don't know. Whenever Larry wants to come on. I love Larry. Love having Larry on the program. Yeah, I saw something about it. John says Elon Musk, the Doge, Department of Government Efficiency. I think even I saw a comment from Musk about that, and he's like, I'm down to be like the efficiency guy for the government. Tell you what, if you were a government employee and Trump comes in and says, or whomever is president comes in and says, Elon Musk is now going to be the one charged with efficiency of government offices, oh man, I'm looking for a new job, because a lot of government employees are not necessarily needed. There are certainly ones that are needed, but we've got a lot of overstaffing there from what I've learned, what I've read. There's a lot of stuff that could be cut. And Elon Musk is pretty clear at just going chop, 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 chop. Tofi says, come on, he was never really a contender. I agree. And I said that too. I was hoping, I believe if he had a stage, if he got invited to the debates, so it's always a two-party system, which bothers the heck out of me. But if he had a stage presence and he could actually talk to the issues, I think a lot of people who didn't know who he was, who would never vote for him, might think differently. I mean, he's got some radical ideas, but I think we need a three-party system. I think that you should be able to have the number one candidate from each party should be allowed to debate. I don't know why we have to alienate every other party. Why can't you have a Libertarian Party, Independent, Green, whatever, pick top 5 and they get to debate? And as we get to the final month, if the polls are so clear that it's just these two, then let them keep the debates going. But if it's still really, a three-way race, then they all get to debate. Anyway. Elon is ballistic on efficiency. Read his book. Oh, I haven't read it. It's Big Eb, good book. I have not read it. I definitely want to. I think that Elon Musk would shred our government offices. Absolutely liquidate. I mean, you saw what he did with Twitter, right? Fired everybody. Just go, done. They're all gone. And remember when he did that, everybody said what? You guys remember that? When Elon Musk got rid of most of the Twitter employees? Everyone said Twitter's going to fail. It's better today, bigger, more accepted. I think it's a better platform today after he got rid of all those people. Man, imagine if he did something like that with the government. That could be a legacy piece. So I think Trump is the one who would appoint Elon Musk, particularly because of his backing. That would be a very interesting piece. How do you think that would change the perception of Trump? If you brought Trump in, elected Trump as president, did he drain the swamp? Did he improve efficiency in his 4 years in office? We could argue that one. I'm going to say no. I don't think he drained the swamp. I actually think the swamp might have gotten worse. However, if Musk were in there, he's just going to be, if an efficiency person, he's going to shred those offices. We're going to see a lot of people from the government office out of work and make things run much more efficiently. And of course, Trump will use that and be like, I did that. Well, Elon Musk did it, but it was under your administration, so we'll give you credit for that one. But yeah, it's going to be very interesting. I hope it happens. Bring in Elon Musk. I'd love to see him clean things up. Let's see. And Andrew Yang was given the stage. Yeah. Old government employees can learn how to trade. Watch my John. Look, I think at this point, this is a funny conversation I had today. Everybody should learn how to trade. Someone asked me, I think maybe it was on this show or one of the other classes I was teaching about AI. And am I concerned about AI taking over trading? Not at all. Not at all. I don't think it'll ever significantly impact my trading. Remember, we are mosquitoes in the grand scheme, in the jungle that is the financial markets. You and I are all fairly small, right? Even if you're trading a couple $100,000, $1 million, you're still small in the pools of trading world. And these AI algorithmic systems that are implemented by institutions, and they are there, they're trading hundreds of millions of dollars at once. You're literally a mosquito. You're insignificant. So my little order, they're not going to worry about my stop loss. They're not going to take that out. Today, 3 contracts on S&P. No one's batting an eyeball at that one. Now, if I'm trading 50 or 100 contracts, that's a totally different ballgame. So, yeah, we have an advantage. Thomasina, have a great weekend. Hope you do something fun. Taco night, good for you. Have some fun. Oliver says he fired everyone because he wanted everyone to come back to the office 5 days a week. Well, good for him, right? I mean, how many of you have run a business and have seen productivity decline with your employees working remotely? I have one of my really good friends. I think he's one of the most efficient people on the planet working remotely. He's actually might even be better working remote. He's amazing. The majority of the people that I've worked with over the past, let's say 4 years, just because of COVID, the majority of people that work remotely, productivity has declined measurably. They're not there. They're out walking the dog. They're sitting on the couch watching TV. They're laying in bed with their laptop watching reality TV shows. Productivity's gone. And the interaction with people is gone too. So can't chop because you can't fire those Fed employees. You can't fire them? I don't know if that's necessarily true, Mike. I don't know if you can't fire them, but you can reallocate their you can remove departments and their skill set's no longer needed. That to me would be a termination, would it not? I don't think that they're invincible and prevented from being fired. Maybe you have to pay tenured or pension type things, but you can get rid of any employee. Unless I'm sadly mistaken, which could be. I could be totally wrong here. Swallow the red pill. You mean the orange pill, John? All right, I'm going to wrap up here before I start going down a political road, which I don't want to go down. Let's talk about what's happening on Monday. Now, not a lot, I'll be honest. There's really not much happening next week. It's really Thursday and Friday are going to be your big days with regards to market activity. The 26th, that brings you nada. You've got durable goods orders, but not really that critical. It's actually looked like it's trying to, the expectations are we're going to see a pretty big pop in durable goods orders. Well, we'll see what that one happens on Monday. And then there's really nothing on the earnings front for Monday, so kind of boring there. Let's see. A couple last minute comments here. Reallocate them to cleaning the bathrooms. Elon tracked the coding volume of the Twitter code engineers and fired the bottom 90%. And as you should. Absolutely. I did not fault him when he did that, and I love the fact that the company's not only survived, but even better, having gotten rid of all that fat. Got rid of the stuff that was just, people were just limping along, milking their jobs. You know, as an employer, you got to work. You got to work. Go in there, and if your employees aren't working, and if I'm paying you $100,000, but you're only bringing me in $50,000 worth of revenue because of your efforts, you're out. See ya. Gone. Okay, that's going to do it for me. I am going to go and prepare, get some things ready, and then I'm going to head up and go see Billy Strings play some bluegrass tonight with a good friend of mine, and I hope you guys have a fantastic weekend as well. If there's something you guys want me to discuss next week, I'm happy to do so. Just email me at TraderMerlin@gmail.com or put it down below any of the YouTube videos. I did receive a question about the new SEC financial website, and could I go over that? I thought that might be... that might be an interesting one to do, so I might do that next week for you. But if there's other things you would like to see, let me know. Well, I'm happy to discuss it, happy to talk about it, all things trading. And I'm hoping for a nice little drop on Monday. I want to see a big drop just so I can sell some more weekly puts and see what the premium's like. But either way, we'll make some trades on Monday. I will see everybody there. Have a fantastic weekend. Do something fun. I'll see you on Monday.